Well, the market is jittery right now. A lot of Asian indices are actually not functioning. India opened almost 100-point lower, but right now we are, off highs, off lows right now. Broader markets are relatively better off, but benchmarks are sideways actually because last couple of days have been good. And look at that. That's the outperformance coming in. The mid-cap index and the small-cap indices, both of them are gaining 2/3% right now. So clearly, which means the money is pouring in this side of the market. Abhishek Basumallick is here with us all the way from Kolkata. Abhishek, let me understand from you, because you study China as well. The new issue which China is grappling with and the fear that this is also likely to impact growth, and that's why probably crude oil prices are lower. Do you think China will be able to contain it? We all saw over the weekend how they are making a massive 1,000-bed hospital and targeting to make it only in 5 days. The China can perhaps move at speed. But what's your own reading been over the weekend for this coronavirus issue and the fear of growth getting impacted?
Good afternoon, Ajay, to you and all your viewers. Thanks for having me back on the show. I think you've hit on a right point in terms of China, because coronavirus is right now we are in a stage where things are very, very uncertain. There's not enough information available out there in terms of understanding the impact of what corona can do, and I think that is what is leading the fall globally in the indices, because people just don't know how big and how bad it could get. Now, if we take a couple of steps back from there and think about what is the impact, a very important thing to understand is that China is increasingly becoming a global, single point of failure for the global supply chain. Now, what I mean by that is whether it's US-China trade issues, whether it's this coronavirus, whether it's problems with pollution, there are significant challenges that is coming out of China, and since a very large amount of manufacturing comes out of that one country, it is disrupting the entire space. So globally, if you now look at the big global players, what they are doing is they are now looking for, and they have been looking for an alternate source. Now, India is a very credible alternate source for at least some of the industries that we have established ourselves in, namely pharma and chemicals, where China has a major presence. So if we can get our act together, these two sectors can actually have a very strong, long-running tailwind that they can benefit from. Obviously, if we are able to capitalize on this, we can actually get a lot more on the manufacturing side. But for that, we need to look at other problem areas like land issues and how fast people can get environmental clearances for setting up manufacturing units and so on and so forth. But definitely problems coming out of China could be a short-term problem for the markets in India, but I think in the longer term could actually be a benefit for our industry here.
Abhishek, how do you read the rebound of the broader market? What is triggering this? Clearly, we all know that this is not mutual fund money alone which is going there. It appears that retail investors, HNI investors have also found their lost confidence in the broader market and probably are visiting counters there again. What are your thoughts in the way in the last 2-3 weeks the broad markets have massively outperformed and have come back?
Yeah, I think that's a very interesting situation that we are going through right now, because last couple of years, I would say, 2018-19, we've seen this very strong outperformance of maybe the top 10-15 stocks in the market, and which automatically meant that the smaller and the mid caps languished. And because of, I think, probably multiple reasons. One, obviously, being that there is money that is coming in, and that money needs to get deployed. Valuations in the top rung stocks are stretched. They have been stretched for a long time. They are still stretched. Now more and more money is getting into the smaller and mid caps. And where there is slightly more valuation comfort, I would not say that the good quality smaller and mid cap companies are also available very, very cheap on a historical basis. But if you compare them on a relative basis, they are cheap. So that is one. I think the other thing which is probably triggering this, and there's no real way of knowing this beforehand, is that people probably are expecting a pickup in the economy over the next 2-3 quarters or maybe even a year. And there are some pockets in various industries which have started. The numbers of the companies that are reporting are coming out slightly better than what they have been doing over the last couple of years. So I think that is also going to fuel this kind of a rally over the next year. So my personal opinion is that this year could be actually a very good year for the overall broader markets. May not be so for the top 10. So a possible outcome could be that the Nifty could remain range bound within a plus minus 10%, probably on the plus side, I hope. But the mid caps and the small caps, especially the better quality companies within them, actually outperforming in a decent manner.
Abhishek, the other pocket which is doing very well lately, increasingly names keep on changing, is Pharma. After 5 years of lackluster to negative performance, then the stocks have come back, some of them, and even the eagerness to look at that space has come back. Just today, just look at how Dr. Reddy got back 5%. I would like to get your opinion on that space. But for a moment, let me also get in Pankaj in the conversation. Pankaj, what's happening in DRL? Is it just a number or something else? The stock is up 5%.
So I think the first point is very interesting, which you mentioned, that people want to buy pharma names, and that's essentially one of the key things, as far as this context goes. Now, there are two things for Dr. Reddy's. One, of course, is the numbers. Margins, quite spectacular, 1,000 crores plus in terms of EBITDA versus estimates of 990, sales numbers 4,400. But it's not quite spectacular. It will not lead to some great earnings upgrades coming in. Yes, there are margins which are better than estimates, but I don't really think it will lead to earnings upgrade. But what we can pick up is about Subexon. And Subexon, they've started to gain market share. This data only came in on Friday. This means that they could do about additional $20 million in terms of sales going into next year because of this drug. This drug suddenly from a 4-player becomes a 3-player market, so margins can also go up, and that probably also could be the reason that Q4 could see upgrades, is what the street is factoring in. 4% higher. And mind you, Ajay, when you talk about the pharma names, I think Dr. Reddy's has led the pack this time around from 2,000 to 3,200 versus some of the other pharma names.
Right. Thanks very much for that. Abhishek, what are your thoughts on this unloved space, Pharma? Do you like anything there? Is there case to look at that space?
Yeah, actually, when I was here the last time, I was very clear that I've been bullish on Pharma for the last, I think 4 or 5 months. In our advisory, we've been advising clients to buy select Pharma names. So that, let me put that as a disclosure upfront. I'm relatively, I'm pretty bullish on the pharma space. The specific niche that I am more bullish on is the domestic pharma space, where companies are focusing, more on the domestic market. So I think that's a space which is very unloved, where there, where there are a lot of regulatory challenges that has come in terms of, fixed dose compositions and a lot of apprehension about what the government regulations could do. But I think that is one space where demand is very strong, where the companies have very decent balance sheets. So that there are multiple players, and valuations are reasonably, good, attractive for long-term buying. So I think pharma is a very, very good space to look at for medium to long term.
Yeah. Abhishek, stay on with us. Time for a very short break. We'll come back and discuss more process of investing with you on the other side of this very short break. We were discussing pharma sector with Abhishek and Bhavesh Gandhi, who looks at the space also closely, joining in now. Bhavesh, what's your call on pharma? Especially names like Dr. Reddy's, the way they have reacted after numbers and the news of Suboxone. And when you're talking to your clients, what's the feedback you're getting about pharma? Is there incremental money set to revisit those names?
I think in pharma, if I look at the sentiment or the broad flavor, then I think it remains divergent. We remain negative on large US generic players for now, and we think more domestic-centric and ROW-focused companies should report and should do well in terms of earnings. So that has been our broad position, and we stick to that, notwithstanding the good operational performance from Dr. Reddy's.
All right, Bhavesh, thanks very much for joining in with that opinion of yours as far as pharma goes. Abhishek, what are you reading right now in terms of themes or in terms of kind of stock picking process of yours? Where are you looking at opportunities?
So my personal take is that this year or maybe, next couple of years, we will be better off looking at companies which will be able to deliver strong growth within the industries that, they are operating in. Now, so sort of trying to back calculate from there which are the industries where growth can actually outperform from what is expected and where valuations are reasonable and may not necessarily be cheap. Also, personally, I am not very keen on strong cyclicals in the sense that for example, metals and steel as a space looks interesting, but that's not something that personally appeals to me a lot from a longer term perspective. But that's for people who have shorter time horizons. Metals is a good place to look at. I think some of the auto ancillaries is in an interesting place right now that they've been beaten down. Again, not too much attention over the last year and a half because of the auto slowdown globally and in India. So that could be another interesting space to look at where growth could come back significantly. Service sector definitely continues to do well. FMCG pockets of the companies which are doing well within the FMCG space continues to be interesting. So that is one space that I continue to like. Pharma, as we discussed, again agrochemicals, very very interesting times for them globally also.
Right.
So these are primarily the areas. And okay, the other thing I missed was PSUs. So good strong PSUs actually seems to be in a very very good spot right now.
All right, Abhishek, we'll let you go on that one. Thanks so much for joining us, completely out of time with this discussion. Thanks very much.